Alright, so first, let's talk about the one that will have the most immediate impact on the housing market, going into effect officially, by the way, on November 16th, and that would be no minimum credit scores. As a bit of a background, all of this begins with what's called Fannie Mae and Freddie Mac. And even though they sound like a rival rap duo, they're actually a federally backed mortgage company who buys and guarantees loans made by lenders and banks. See, anytime someone wants to buy a one-bedroom, one-bathroom home in San Francisco for $2 million, they go through a bank or a lender, allowing the buyer to be able to borrow most of the purchase. However, what most people don't realize is that when you get a mortgage from a bank, the bank isn't the one that actually holds onto it and then patiently waits for you to pay it back over 30 years. Instead, banks usually package all of their loans together into one giant basket, and then they sell that bundle off to investors as mortgage-backed securities while making a small profit in the process. This is why most banks have universally accepted mortgage requirements that you have to follow, like a minimum income, minimum amount of debt, or a certain credit score above 620, which is actually going away soon. Okay, we'll talk about that point in a moment, but because investors aren't always out there clamoring to buy these mortgage-backed securities, in 1938, the government created a backstop to guarantee to buy those mortgages if they meet a certain requirement. And by doing so, they created Freddie Mac and Fannie Mae. And this is where things get very interesting.